Hi everybody, Steve Griffiths here, developer of the MTPredictor program. In this video I'd like to look at some of the more advanced setups we can do in the MTPredictor program. In this particular example, the high volume VSA spike. What do I mean by this? Well, what I like to see is the market. I'm just moving forward here on a 3-minute DAX chart. So this is the DAX on a 3-minute chart here in Europe this morning. And I'm just moving forward here. What I like to see is the market make a strong move above a recent high or low. So here you can see we had a high pivot. The market moves strongly above this high pivot. Now what we have in MTPredictor is we have our volume bars coloured. Normally they're just blue, that just indicates normal volume, but when we have a high volume spike, whoops, I'll just go forward back one bar, sorry about that, high volume spike, the bars go red. So this one here indicates that this is a high volume. In other words, the volume's increasing on this particular bar. The actual maths are a little bit more involved in that. It's not just high volume, there's other things we look at as well, so it's proprietary maths. But the idea being is that you're looking for a bar that it goes beyond a prior level with a high volume spike. We then look for the area where it's going to find support or resistance. For this we use our decision point. Again, very easy. So we click on the decision point, we click on the prior pivot, and what we're looking for is to see what the market does when it gets into this decision point. Because the decision point is what it says the market's making a decision. So if this was indeed buying volume, the most amateurs think, i.e. high volume on a break above a prior pivot, this market should keep on going up. However, let's move forward a bar. That's not what happened. The market reversed sharply and gave us a red MTPredictor sell bar. So that means that this high volume here was not buying, it was actually selling. It was actually professionals selling into this rally. Now what does that mean? It means that professionals are getting ready to push this market to the short side. So we now need to have a look and see whether we can get a trade off this. So where would our first target be? Well, we have again we can use the decision point. Here's a nice pivot low, so we can project this down here. There's also a lovely low down here, so we just click on that one, and as you can see we have two decision point areas in this particular low low area here. So this would be a natural target for the professionals to move the market to. So do we just go ahead and take the trade? Well, no, we don't. We have to assess the risk to reward. Again, these are the tools that in the MTPredictor software program. Right mouse click, we then do risk to reward. Here we need to select the bar of entry, which would be this red bar. The stop would be just above this pivot high here, and then we come down into our decision point levels around about here somewhere, and we think, well, actually, if we are right and the professionals are getting ready for a short move down, the potential profit would be 3.2 times the initial risk. Now for me that's good. Anything above 2 to 1 is good. Notice the position sizing here, in that to keep our risk small and under control, the software has suggested we only trade one contract on this. Again, the position sizing is really important combined with our targets, because that keeps our risks small. So if we're wrong, our losses are small, and if we're right, our profits are large, and that's the whole key. I also like the look of the stochastic, because if you have stochastic here, the stochastic's got good divergence coming in here as well. I like to see that as well. So if we move forward, we see the market takes us into a short position and then starts to go down beautifully. Again, notice the lovely divergence on the stochastic and also how we're disappearing down here. We don't particularly worry about this high volume spike because we're in the middle of nowhere, so we just keep on going down, keep on going down. Whoa, look at this bar. A really sharp really sharp fall right down into our targets. We say thank you very much, bank our profit here, and look at this bar here. I wonder if this is going to indicate that the professionals are now finished on this decline and they're now going to reverse it back up onto the long side. Well, look at that. That's exactly what happened. The market has now rallied off that low beautifully, but as such has given us a brilliant position to actually take our profits. So here was a great example of how the high volume spike indicator in MTPredictor combined with the decision point tools gave us not only a trade entry but also a target. Our risk, reward and position sizing allowed us to come into this short trade, controlling our risk, and then coming out with our profit down at this bottom here. Not only did we actually nail this low here beautifully with our targets that were put on the chart before they got there. Do you remember that these targets were actually on the chart right back here? Whoops, sorry about that. Our targets were on the chart right back here as soon as we actually came in, and just look what the market did. Market went straight back down into them and nailed the low. And as a result, we had a lovely plus 3R profit. So these are the kind of trades that more advanced traders among you can look to find with the software, and as such can actually generate more trading opportunities above and beyond just the automatic setups. But these are the kind of setups that I like to look for myself, particularly the high volume spikes in and around decision point levels. These can produce some good trades because you'll know you're in the direction of the professional traders, and you're faking out against amateur traders, which is always the best way to be, with the professionals and against the amateurs. And as you can see, a lovely trade.